Hello, this is Mike Swanson. I run the website WallStreetWindow.com. And the odds are that you're watching this video because you got an email from me telling you that it's up and on YouTube for you to watch. Now, if you're not on my free email list, go below this video and you'll see a link to join. And then every single trading day before the opening bell, you'll get an email from me with my market commentary and links to what I believe are the top stories of the day that you need to know about to understand what is happening in these markets. Now, in this video, I'm going to give an update on what I'm doing in my public portfolio, the performance of that portfolio, and what I'm planning on doing with it. But everything we do in the market has to be in accordance with the underlying trends in the market. You got to adapt and adjust when they change. That is, if your goal is to beat the market, that means beating the performance of the S&P 500. I believe anyone who takes what they're doing, whether they're an investor or a trader, seriously, has got to make that their goal. If their goal is not that specific, which that's a very specific goal, and if you aim for a specific goal, then your subconscious thinking will align to that, in what you try to find on the internet or read in books will align with helping you achieve that goal. If you do not have a specific goal that can be achievable, like that's reasonable, like beating the performance of S&P 500, then the risk is that you'll just be caught up in hype. And there's tremendous misleading hype on the internet. I call it technobabble because there are people out there that promote things such as virtual crypto coins and want you to buy them while they're selling them. There's stock promotions that go on that are the same sort of thing. Or gurus that just want you scared. So they'll tell you to do what they want, basically. But what we want is clear thinking, and that means having a clear objective. And frankly, the idea of like, I just want to get rich. Here's a crypto coin that will get me rich, or one stock that's going to get me rich. That's not a realistic goal. And even if it were to happen, say you did happen to get in one stock and that one stock went up 100 times in price and you put all your money in and got rich, what would you do after that? Because you don't really have a strategy on that's long lasting, because the next time you try to do the same thing, you'll end up losing a tremendous amount of money. I once met somebody that told me they put $10,000 into a call option. This was over 10 or 15 years ago. And that call option went up and they 10 times their money. And they did the same thing again. And it went up again. And this time they tripled their money. So they had, no, they made more than that, actually. It was like 5 times. But they had a tremendous amount of money in their account from $10,000 on 2 trades. But those trades involved risking everything they put into them. So what did they do? They thought, I'm going to do it all over, do it again. Well, that huge 500,000 now went in value to 0. They wiped out. Why? Because they weren't doing anything realistic. They're gambling in the markets. And too many people have been encouraged to take what are essentially reckless gambles in the markets since the bottom in 2020. The Robinhood app is designed to make you gamble. There's no useful information on the app about what stocks you should buy. Simply lists of what other people buy. They even guide you into risky sectors and worthless crypto coins. What I want to do is by showing you my public portfolio, talking about it, what I'm doing as someone that has been trading these markets since the 90s, that once ran a hedge fund for 3 years, that was in the top 30 of all hedge funds, is ranked by Hedge Fund Net. At the time, they were ranking 5,000 hedge funds. I don't even know if Hedge Fund Net still even exists, but it's tremendous performance. And I've been doing this for a long time. And as you'll see through my public portfolio, what I want is to teach you how to make money in a sustainable way by not taking gigantic risks, because so many people are getting wiped out. Quite frankly, we're now in 5 months in a bear market since the S&P, the NASDAQ topped around New Year's. We're heading on the 6th month. Well, many sectors, many stocks been falling even longer than that. Things such as the ARK ETF are falling even much more. So is Bitcoin. People that were taking risky things like, oh, I'm just going to trade nothing but call options, they've pretty much already been wiped out of the market. Robinhood reported first quarters in the first quarter and revealed that 10% of their customers wiped out several million traders. That process is only going to continue on because this is a real bear market situation. And frankly, people think they've seen bad things, and we have in the economy, in culture and stuff. But if you haven't been trading the markets previous to 2020 and gone through the 2008 crash or the 2000 bear market, you really have no experience to understand what is going on. You must educate and equip yourself with what is going on now. You need to know how markets work. So let me show you a book and then we'll get into the portfolio. But if you're new to these markets, since the bottom of 2020, and you haven't read anything about investing or trading, what you've essentially done is gone through the last 2 years as if you're a soldier in a boot camp. Now the war is here. This year is real. This is the war. The first 2 years was essentially being in a boot camp. The problem is the vast majority of Robinhood traders, people who open up crypto coin accounts, you could say they're in boot camp, but they never got up out of their bed to train or learn anything. All they've done is what other people have told them to do, whether it's picks on Twitter, crypto coin recommendations. You must learn how to navigate the markets in order to understand the situation we're in and be able to survive it as a winner, actually perhaps even beat the market, and then come out buying and kicking butt in the next real rally when it starts. No, I do think the market could bounce this week, but that will not be the start of the real rally. With tremendous opportunities in market cycles, in navigating them. No, walking in the dark with a blindfold, eventually you hit a wall, but you take the blindfold off and you can see the opportunities and you can be a real winner. And in a year like now, the quicker you do that, the better. So the number one thing I'd recommend is you buy this book, Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. If you never read investment book, stock trading book, and you refuse to buy this book, I don't really know what I can tell you. You're not serious about this game. That's it. Your actions show whether you're serious. And if you are unwilling to read one book, then you're not serious about this. And 50% of the people in the markets lose money, even in bull markets. That's according to a study by Terrence Odian. And only about 15% of the people are real winners that are making outsized returns. Now, most people matched, the other above, between that 50%, 15%, what most people are doing is getting returns around the performance of the market. And so most people, the vast majority of people are getting hurt really bad this year. It doesn't have to be that way. And you can always do better and always be learning. And nobody knows everything about stock trading and investing, and you are learning all the time. So grab this book, read it. Even if you already own it, it might be time to read it again. And one thing this book will do is it will show you a trading strategy for getting in positions and actually getting out, that you can use. And I use a derivative of that strategy and still at times, it's a core part of what I'm doing. So grab this book. So let's look at my public portfolio, understand what's going on. So I started this at the beginning of May with the idea that, look, we are going to have tremendous opportunities, good chance that when this decline ends, it could be the low of our lifetime. That means it's going to be one of the best buying opportunities of our lifetime. Doesn't mean I'm in cash 100% in my IRA, my main account, or my public portfolio, which at this point is the way it's allocated is pretty much in line with what I have in my IRA. But what I did, you can see we are beating the market. This portfolio this month is up 3.03%, while the S&P 500 is down 6%. I can't promise you I'll beat the market every single month, but it's my goal to do that. And this month we're doing it. And that's what I'm about. I want to show you that it can be done and get your mind on doing that instead of trying to get rich quick, which is unrealistic and leads to heartbreak. It looks like that's what people are doing when everything was going up and there was all the hype in 2020, 21, when you're in a bubble situation similar to 1999. But those type of years are rare in the markets. And I don't know when we'll see one like that ever again, if ever, if ever again. So anyway, so far we're doing good. Here's what I'm invested in. And again, this closely mimics my retirement account, my IRA. I don't own SGOV in my IRA. That's an ETF that I simply use to represent cash. I wanted to start this with a good cash position because we're in an extremely volatile market environment. I didn't just want to jump head dive with 100% vested. Cash leads to flexibility, the opportunity to buy more ETFs of whatever sort or individual stocks. At some point, I want to put individual stocks in this public portfolio, but the situation we're in, I'm still sticking with ETFs until I think this decline's over with. So what do we got? We're in DBA and agriculture ETF. I'm up since this month 1.14%. I'm down in gold almost 1%. I shorted the Russell 2000 through the RWM ETF, up 5% essentially. I'm short the NASDAQ 100 through the PSQ up about 9%. So what we got, what is now a 36% cash position in a 28% long position in about a 32% short position. I wanted to come in this month with a cash position and basically 50-50 long short. That's thinking like a hedge fund manager. That's how, that's what I was at one time. And that's how I handle my money when we're in volatile markets, when we're in bear markets. I don't go 100% cash, I hedge. But I think being 100% invested is not, I want to be a buyer when this is over, and I need cash or hedge positions to do that. And that's what I got. That's what I think is the thing to do. So one thing I did last week, I had a couple losers still in my main account. I liquidated them periodically. I will liquidate losers in my accounts, realize the tax loss selling, and then it helps free up money. So I didn't have a huge number of losers, but I got a couple and I liquidated because I do it periodically from time to time. I'm not someone who sits on things that have losses and just lose. There's a saying in the market, let your winners run and get rid of your losers. And that a phrase is stuck around because there's a lot of truth to it. The opposite is of the loser's methodology. So when we look at the stock market, we could get a bounce this week. We saw, as many people I see on Twitter are pointing out, a reversal day on Friday. The S&P 500 was down, making a new low, and then it finished about even. But what has happened is we've seen multiple such days since January, 1, 2, 3, 4 at least, since January, all such days. Eventually the market went lower. And the last bounce we had actually ended Thursday, and it was one of the weakest bounces so far this year. So I don't see any signs of a real bottom in the market at all. For that, I need to see the VIX at least over 40. That's the fear index. I'm monitoring the activity on Fidelity of individual traders. They're not scared. The ones that remained in the market are continually trying to buy in the down days. I suspect that this sell-off will end as all other sell-offs have ended, with a panic drop. That's why I think the VIX will go up to 40 at least. But we're probably going to see a lot of selling among Fidelity traders. So far, that is something we have not seen. So I see no signs that we're at a real bottom. So when I look at the market, though, here's the VIX on the bottom. You can see the VIX is actually made a lower high last week than at the previous high. Another indication of very little fear in the market. If you don't know what the VIX is, go to Google, type S&P 500 volatility index, find articles about it, read about it. It's something you need to know to navigate markets like this. You just need to know. I can't, explain every little detail. I'm trying to guide you into sources to help you on your path. Stan Weinstein's book is something like you need to read. It's a textbook. You basically on trading and navigating technical analysis, using it for these markets. That's what I'm going to do. I'm going to point you to things to help you, guide you where to learn, because I'm not doing a college course or something where I'm going to lecture on every little detail in the markets every day for hours. You are responsible for your decisions in trading. If I wanted to take responsibility for your actions, I'd become a registered investment advisor, open up a firm and say, hey, you want me to handle your money? That's not what I'm doing. So anyway, here's what I'm looking at. What are these blue lines in this chart? These are retracement levels of the March 2020 bottom and the high above 4,800. And these retracement levels typically act as long-term support levels for the stock market when you get below the 200-day moving average, which we are. And have breached the 1/3 retracement level last week and then bounced above it. So that's acting as support right now. It's around 3,800. And we closed Friday at 3,900. We went below that level Thursday and then went above it Friday, closed above it Friday. So this is one reason a lot of people are looking for a rally, a bottom. I do think we could get a rally for a few days, but I think it likely, if it does happen, to be very weak. So I have no interest in trying to game a rally. It's going against the larger trend that we're now in. So basically, when you're in a bull market, you want to buy the dips. When you're in a bear market, which is we're in, you want to use the rallies to lighten up on positions. Or short if you want to be an aggressive trader. I shorted, but it's been a month in my main account since I shorted, and I shorted in this account, my public portfolio at the start of the month. I think you need a bigger rally than it's just, I think it's too late to short. I'm also not happy about the idea of buying. So this week I'm looking to really do nothing and just watch what happens. You got to be patient to let things line up, more so now than ever. And that's what I'm going to do. But my price target for this decline that started in January is essentially the 3,400, 36 zone of the S&P 500. It's not that far away now. And that would the 3,500 area is the 50% retracement level of the entire decline. It's also a roughly 30% decline. So that said, that's my target. That's where I think it's realistic to expect a bottom. It doesn't guarantee such a bottom would happen. That's why I'm not telling you it's a prediction. I'm not promising I'll even be a buyer. But if we get the panic I'm looking for materialize at those levels, I will be a buyer. I will be someone calling the bottom. But if we just go down there and there's no panic or a very weak bounce, as such as what we've seen over the past couple of weeks, or we've seen play out multiple times, then I'll be telling you, we're probably going lower. And then you're looking at the 3,200 level. And then possibly the more, you just don't know. There's no way to predict. Trading is not about predicting the future. It's about watching the trends and looking for changes that the trend you're in is over. So when you're in a downtrend like we're in, that means monitoring sentiment. And I'm not talking about investor sentiment surveys. They actually become useless in markets like this. I'm talking about what traders are actually doing. Looking for indications of true panic in the market itself, in the structure of the market, to signal that the decline has seen a sellout, a selling, a washout, a panic capitulation. accelerated VIX levels, and mass selling the fidelity traders. In a bull market, we would have already been seeing all this already, but in a bear market, things are different, and that's why this is nothing like 2020 and 21. And what you've experienced and think you learned in those 2 years do not have any bearing, any use for the market environment you're now in 2022. In fact, they don't really have any use for navigating normal bear markets either. And that's why you need to educate and learn if you're serious about beating the market in the long run. If you're not, I would suggest to forget the gambling and just go get an investment advisor and just ask them to manage your money. Because the time of get rich quick ended, last year, if not 12 months ago, around when the time the ARK ETF topped out. So that's what we're looking at. That's this week. Can we get a weak bounce? Good chance of it. Wouldn't expect it to go through the highs of the other week. I wouldn't expect it to be much of a bounce, but we'll see what happens. We'll talk about where the strength is in sectors worth buying or thinking about buying. Other things I do actually own. I got lots of long positions in future updates and videos. So here's what you do. Hit like, and then YouTube will know that this type of content people do like. In a financial industry full of hype and all the technobabble and crazy claims, videos like this are kind of out of the ordinary. There's only a small fraction of people that really want to read a book, for instance. Most people are just content to see a guru or someone on Twitter and just buy what they say and just believe the promise. But we're not in a time where that works anymore. You got to take responsibility for your trading. Hit like, then YouTube will show this to other people, and that encourages me to make more videos. And if this is the first time you see me on YouTube, click the subscribe button and then click the bell next to it. And then YouTube will send you an alert as soon as the next video is up. And have a good week trading, and I'll be talking with you later.